So I wanted to do a little bit different today after the morning session has completed. And instead of recapping executions, I want to recap the analysis, because the analysis is more important than execution. You have to have an idea of where the market is likely to go to. So here are some snippets from my analysis this morning before the market opened. Let's look at this. Let's look at what we got. Top-down analysis. We'll start with the weekly chart. We got a new month, new week. There is the monthly high for, and I am using this on the adjusted chart. So it really is not impossible for the market actually to trade down to this old high. We'll see if it does. We'll see if it wants to, but before it does that, it needs to get below the May high. I'm sorry, the April high. And, you know, if it's going to do that, we'll see. We'll see. We'll see if this thing, we're in all-time highs. So I'm not in the business of picking the top of the market. I could care less. So, but there's the May high. There's that old, like old monthly high. Label that. Month. So I know, like, you know, the market could easily trade down to that. It shouldn't be able to be visible on the monthly, so get rid of that. So let's just send that right there, and then we go to the chart. We got last week's high, which is sitting right there. High. Okay. I'm only going to mark up the prior week's low, but I am interested in the gap for the week. The one down there. Daily chart. There is a daily volume imbalance right here. And we have this entire suspension block that's going to be right here. Okay, I'm not going to put that on the chart just yet, but I know it's there. What I'm going to do is I'm going to put it on a different template here. Put it over here. Knowing that it's there, but I'm not necessarily worried about it now because the market's not there, but that's a really good draw, in my opinion, for the market to draw down into the suspension block right here. We can drop down to the 1 minute, see how they open this pig up, and inside the moving opening gap, there's the hourly SIBI. Here's the pre-market range. There's the bigger range that's also in the pre-market gap right here. I like the idea of it going down here. Volume imbalance right there. That's a nice trade. So, see how they open this thing up now in 5 seconds. Okay, I'd like to point that I was looking for some sort of run on buy side. The market did take out those highs eventually, but didn't break down until later in the afternoon during the 1050 to 1010 macro. We can see that we had a high resistance liquidity run higher until it took out that external liquidity buy side, which is that basically that just having right before 6 a.m. high, low, whatever the sell event that took place there. The market just kind of chopped high resistance liquidity run higher until it took out those highs there. It peaked above midnight before it broke down. That was also looking like a rejection right there from the prior week's high. So that was a very good short that I got into. And I noted this volume imbalance right here, and look at that right there. Going right to it. So that was the low-hanging fruit objective for me. And there is a remainder of an hourly BISI, but more importantly, that new day opening gap, which is part of the suspension block that I have over here marked out that I was looking for the market to potentially trade to. It traded to it. Will we see continuation lower, or will it go high from here? Or go higher from here? The market's still bullish, but we could be experiencing a pullback, and pulling back from about 50% of this range, high to low, working inside this down close candle, inside of the suspension block, very likely and healthy for a retracement. So essentially, for the session, I was primary bearish, and that was outlined ahead of time on my pre-market analysis, and that's essentially it. It delivered not perfectly, because I would have liked to see it do it like at the open, but you got to be patient. You got to sit and wait for the signal for the trade to take place. And this was very simple: liquidity taken, market structure shift, 2022 model entry. So in a premium of the range, deep premium of the range high. See you later. And that's the wrap.